Welcome back, everyone. Well, it's that time of month again. Time to go over the QYLD monthly dividend distribution. It's actually dropped. So in this video, I'm going to explain the dividends for QYLD, also a new competitor fund that I've found that may or may not be better, called QQQX. So I'm going to go into that, explain a little bit about QQQX, and then show you the dividend performance of both in a spreadsheet towards the end of the video. But I'm going to start by showing you the dividend payout for QYLD in my account. So this is the Roth IRA, and the dividends dropped to 17.85 cents for 210 shares, which is a $37.50 approximately payout for the month of June. And if I sort it here, which I thought I had, so QYLD, it pays, as you know, once a month. So you see June, July, it's going to approximate the 17.85 cents for each month for the next 12 months. And now let's look at what it's been doing for the last month since my last update on the dividend. And I'm going to do these monthly because it's a monthly dividend payout. And, you know, it's a nice dividend to get every month. Now, Yahoo's not quite accurate. Yahoo's basing the yield off of just the monthly payout. So there's a glitch in the system they'll have to fix. So ignore that 0.20. But if we look monthly, it's dropping still. So it was at 1946 when I last made this video on the dividend update. And now it's at, actually it's at 1805 right now. It's fluctuating a bit. But this isn't one that I may stay in forever. I like collecting the premium, but it keeps dropping. So I'm going to have to decide. I like the covered call strategy. Like I always say, it's a nexus of dividend investing, options trading, and index investing in a sense. That's why I'm a big fan. But I found another one that may potentially be better called QQQX, which is also indexed for the NASDAQ 100. But you actually see some price appreciation in it. So this one trades at 24.35 per share. And you can see it's actually down since the start of the year, but it's coming back up a little bit from its bottom. It hit bottom about May 23rd. And if we go back a year, it was around $30 last September, hovered around there till the end of 2021. And then it dropped, came back up a bit in March, and then dropped from there. And then now let's look at the dividend payout on this one, because this one has one advantage over QYLD so far, is that the price so far has actually been appreciating over time instead of staying flat. So if you go back 5 years, $21, it's at $24 today, whereas QYLD has stayed, well, it's dropped $5, over $5, almost $6. But this one, like I said, this one may be better because of the price appreciation. And the dividend payout, given the price appreciation, is $1.97, and this is per year. It's actually paid in 4 quarters of the year, which I'm going to show you. And it's a payout of 8.14%, which is not quite the 12% of QYLD, but still pretty good. If you can get a fund that's going to appreciate in value better and pay this kind of a dividend, that's like a twofold benefit. So this is the Nuveen NASDAQ 100 Dynamic Overwrite Fund. And let me just give you a little bit of information on it. This one's been around, according to this one's been around since 2007. So, and overall, I mean, it's dropped during recessions. Its peak was last year, but I mean, overall, it stays pretty solid in terms of, I mean, all time 22%, given the high payout of the, like some people say, it's not technically a dividend, but it's the covered call premium that you're getting for the fund selling the covered calls. And this kind of does a similar thing. I'll just show you in the description here real quick. The fund is designed to offer regular distributions through a strategy that seeks attractive total return with less volatility than the NASDAQ 100, which has been beat up very significantly this year, as we know. By investing in an equity portfolio that seeks to substantially replicate the price movements of the NASDAQ 100 index, it replicates it much better than the QYLD, which kind of works a bit against it in a way. as well as selling call options on 35 to 75%. I guess we can just go to the Nuveen site. And like I said in my index video, there's a lot of options when it comes to index funds. I mean, you've got Vanguard, you've got Nuveen as one, obviously Fidelity, JP Morgan, Goldman Sachs. I mean, just about every major company has their own, every major financial company has their own index funds. So here's some further detail on the QQQX. Selling call options on 35 to 75% of the notional value of the fund's equity portfolio with a 55% long-term target in an effort to enhance the fund's risk-adjusted returns. And as you can see, it's doing a pretty good job overall. So it will consider the fund's tax positions and employ techniques to improve after-tax shareholder outcomes. Now what I want to show you in a spreadsheet is how long it would take for an investment of $10,000 to double in both, with no fluctuation, just with the dividends alone. So if we go to the spreadsheet here, so this is QYLD, this is QQQX, growth of 10,000, assuming that these are in the DRIP, dividend reinvestment program. Currently 1804 at the time I put the spreadsheet together, which was right before this video, 2432 for QQQX. This would buy you 554 shares in QYLD. This would buy you 411 shares in the QQQX. So you can see you buy more into QYLD because it's $6 less. And the annual dividend payout, as you can see, and this is forward applying the 0.179 per month times 12, which gives you a $2.14 or 15-cent annual payout versus a approximately $2 payout in QQQX, which is actually paid 4 times per year. And I increased this because this dividend payout actually increased from 44, 40, almost 45. Well, let me look at Yahoo here. It increased to basically 0.499, and I times it by 4. I'm assuming that that increase is going to carry forward. And so did Yahoo. So that may be being generous, but that has it at about an 8%. I'm going to jump back to Yahoo to review those again before I end the video. As bonus content, that'll be the bonus content. But for here, I'm actually going to go through how long it would take each to double. So with a 12% reinvested dividend payout in QYLD, you'll have 11,200 in year 1 versus 10,800 in QQQX. And then year 2, 3, 4, 5, 6. And then by year 7, you would double, assuming the fund hasn't dropped significantly. And I'm expecting as the economy starts to recover, I'm assuming that we're in a recession right now unofficially. It won't be declared until Q2 unless they finagle the GDP numbers to make it look like it's growing. Right now, I think we're actually unofficially in a recession, but those of you who are savvy know that 2 consecutive quarters of GDP decline constitutes a recession. So I would expect, unless anything changes, that by July, a recession would be declared. But when the economy recovers from that, I think QYLD will at least stabilize in price. We won't see the drops that we're seeing because eventually the NASDAQ is going to stabilize and start growing again as well. That, the index will grow again. We're not going to be down like we are this year. We're not going to stay down forever. Same with QQQX. I mean, we're going to see it. It could at least come back to its 2021 values, if not higher. But, we have to kind of weather the situation we're in with inflation and going into a recession. But under these circumstances here, you would double by year 7 in both funds. And you can see with QYLD, you would almost be there in year 6, but you're not quite at 20,000 to double the 10,000. So by year 7, you would definitely hit the doubling threshold. So with both of these, I mean, they're both great, but I'm actually thinking at this point, QQQX might be better given what I've shown you. You can sacrifice a little bit of a percentage in the dividend payout for better performance in the fund. And you're doubling your investment at the same time if neither one fluctuates from this point. But as we know, both are prone to fluctuate. But this is assuming that they're not. This is assuming just a dividend payout in the DRIP program. But either way, at this point, I would lean towards QQQX. And in fact, one of the next things I do in my account, I'm going to buy into some of this. And then I can make videos about my dividends and that. Because these get a lot of views. I mean, I like dividends, but they get a lot of views too, so that helps. Now let's jump back to Yahoo, and I want to show the dividends historical data for each one as part of this update. So I showed you my dividend in both. Actually, you know what? I didn't show you in the main account. It's $12.50 in the brokerage account because I have less shares of it, but it's $37.50 in the Roth IRA. So with that, let's jump back to Yahoo. Historical data. I'll show you QYLD first. Dividends, frequency, monthly. And I'm just going to show you that this has dropped. It's been, I mean, it hit its peak for the year 2022 in March, 21 cents. Then it was 20.5 cents. Then April, 17.9 in May, which is basically being paid out today. So that's dropped. That's actually a low point in the data going back a year. Let me go back a little bit further. 5 days is not further. Let's go back to, let's see. So this is all of the data here. So this 17.8 cents or 17.9 cents, this is the lowest it's been since, looks like March 2020. So we'll see what happens with this. I'm going to hold on to it a little bit longer. But in the Nuveen NASDAQ 100 QQQX, let's look at this one, historical data, frequency monthly. And so you can see what I based my calculations on, the 49.3 cent dividend payout, March 14th. And you can see it's quarterly. And I'm assuming they're going to raise this a few cents again, probably 49.9. Which, as you can see, in the last 3 quarters before then, it was 44.9. And let's go back to the maximum. Let's see, maximum. And yeah, you can see based on, so 2020 and 2019, it was 39 cents. It was 42 cents in 2018, 37 cents for 1 quarter of 2017, then 35 cents. So it's fluctuated a bit. I mean, you can see going back to 2011, you can see it steadily increased from there. And then it hit 42 cents, dropped back a little bit. Now it's increasing again. So that's a good sign. That's probably because of the covered call strategy, because of the way the NASDAQ's dropping. It's helping to increase these payouts. And that's really one of the key benefits to both of these funds is, that the covered call strategy is better, obviously, because, you're selling calls against the index that's dropping. So you're going to keep more of those premiums. So that payout's going to go up. That's obviously why QYLD is such a big fund this year, and now QQQX. So that's my comparison of both. I'll end it on that note. If you like that, please remember to like, comment, and subscribe. And if you want to check out further videos of mine, check up here and up here. It should be popping up here, if not already. And again, please remember to like, comment, and subscribe. And thanks so much for tuning in. Take care.